Well, there wasn't too much data out this week, economic data, anyways, other than in the housing industry. And we had LEI, a leading economic indicators report that came out. It was a little tad better than expected, which is good. The housing report was pretty flat. The only good news about it was that the prices for existing homes were up a little bit. This morning we'll have new home construction out, sales out. The bad news we had that came out, and I don't know if we can call it bad news, was from HSBC Bank that does reporting on PMI out of China. And the PMI out of China, which is the Purchasers Management report that kind of gives you an idea of the economic activity, was below 50, came in at 48.1 for March. Below 50 means contractions. So China was contracting, and is also out of Europe, it was below 50. So that came out at the same day. Actually, it was out yesterday morning, and the market didn't really care for that because there's an indication that they're slowing down. Now, I don't know why that would be a surprise about this, because we know that Europe is slowing down. And actually is slowing down less than we expected. And we know that China was trying to slow its growth and has projected 7 to 8% growth instead of the 10% growth that we've seen year after year after year out of China. So we know that there was some contraction, and that should have been expected. Here in the U.S., we didn't have much economic numbers out this week, but it does appear that our economy is growing to some degree, not great, to some degree, and gaining a little bit of strength. Now, it seems kind of odd that our economy is getting stronger, China and Europe is not. Well, one of the reasons are China is an export country. They export a lot to Europe, and we are not. We are basically a consumer-driven economy. 66% or so of our economy is driven by consumers, and we're putting on a few more jobs, and things are getting a little bit better. Not great, but a little bit better. And so this indicates that, this means that our economy is improving. We are more responsible for our own economy, whereas China is trying to be a little bit more consumer-driven, but it's still export-driven, much like Japan. So those areas kind of are questionable. Ours are okay, but don't think we're not going to be affected by the world economy in China and Europe. We will be affected. It will slow down our growth. It will slow us down a little bit. Don't think it won't. The big issue is oil prices for us. Since everybody in this country has to buy gasoline, and every dime that it rises, this means more money out of the pocket of the consumer to buy something else. So that's more important to us, rising oil prices. And this is despite having plenty of oil. And I read this week that we have more natural gas than we'll ever know what to do with it. And I read that in Alaska is trying to push through, they have a ton of natural gas in Alaska, trying to push through some efforts to build an LNG, a liquefied natural gas facility on the coast so they can ship that natural gas to China, who needs it. And that's going to take at least 10 years. But the Alaskan politicians are behind it, and they need to build some pipelines and build a facility. But I think that's a great thing that we need to concentrate on. And remember, we're gushing oil out of the shale oil facilities in the Midwest, North Dakota, and so on and so forth. California has a lot of shale oil, but I doubt if we'll ever be able to get to it because of the politics involved. So the market was a little bit weak this week, and it will, we're way overdue for a correction. And a correction is not 1% or 1.5%. A correction is, 5%, 10%, somewhere around there. We're way overdue. I just don't know if we're going to get it. Or we will get it. I don't know if we're going to get it anytime soon. It looks like we might.
The InvestTalk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's InvestTalk talking points, plus news of upcoming InvestTalk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.